Good morning and welcome to My Insurance Matters, a 5-minute weekly broadcast designed to help individuals and businesses address risk and manage their insurance costs and coverage. My name is John Shega and I'm your host and the owner of Aspire Insurance Agency. This week we're going to continue our discussion about health insurance, and once again we're joined by Dave LaClaire from Swenson Anderson Financial Group. Before we begin, I want to be sure people know how they can reach us. To do so, they can simply go to the web at www.myinsurancematters.biz. Dave, last week we talked about employer-sponsored health plans and COBRA. This week we're going to explore a popular option for families or individuals that aren't covered by an employer-sponsored plan. Example of when these programs would apply would be in a situation where a person is self-employed or a family finds themselves without group insurance because of a layoff or a termination. Until recently, people had what I would call traditional health plans for themselves or their family. There were 4 major components: coverage, premium, coinsurance, and a deductible. That is, one would go to the doctor, pay a small copay, and the insurance company would pay either 80% or 100% of the remaining costs. That arrangement made it fairly inexpensive when one go to the doctor, but it started driving the cost of insurance up due to the frequency of the visits. Something needed to be done to help control costs for both the insurance companies and ultimately the consumer. Dave, am I explaining the big picture somewhat accurately?
Yes, that is a fair representation.
Okay, so out of that situation came another option to help traditional health plans. They are called health savings accounts, or more commonly known as HSAs. Again, these are available to both individuals and families. Dave, could you explain how they work?
Sure, John, happy to do so. In some ways, they work just like the traditional health plans. The major components still include the policy itself, referred to as a high-deductible health plan, and the $20 to $25 copay is replaced by the annual deductible. Additionally, a tax-favored savings account is permitted under federal law, allowing a person to set aside a certain amount of money to pay for health-related expenses. The list of qualified tax-favored medical expenses for which the savings account dollars can be used is quite extensive.
So the owner of an HSA is responsible for the annual deductible before any insurance payment?
That's correct. The thought, of course, is that people will now determine when a doctor visit is really necessary, since it will be their money paying for all medical expenses up to the deductible amount.
So if I had an HSA, I might be less apt to go to the doctor for a common cold?
Yes, knowing that a doctor can't cure a cold, you might decide to head to the store for an over-the-counter medication to provide some relief. This is a good example of how you control your medical costs.
But the cost of the over-the-counter medication would be covered under the savings portion. Is that correct?
Yes, the list is very lengthy. We both wear glasses, which are allowable expenses under HSAs.
So if I don't go to the doctor often, I might be apt to pick a higher deductible to reduce my premium costs, yet have the coverage for the large medical situation.
Exactly, and there is usually an option to purchase a preventive benefit to pay for an annual physical. Again, the goal is to provide excellent coverage with more cost control to the consumer.
In a moment, let's talk about how one can learn more about health savings accounts. First, a word from our sponsor. Our sponsor this week is Midwest Family Mutual Insurance Company, an insurance company originally organized in 1891. Today they offer a wide range of personal and commercial products via independent agents across the upper Midwest. Midwest Family Mutual has an A- rating by AM Best, and in 2004 they were awarded the Company Award of Excellence by the Minnesota Insurance Brokers Association. Need a company that knows Minnesota? Consider Midwest Family Mutual Insurance Company. Welcome back. As a reminder, people can contact us at www.myinsurancematters.biz with any insurance-related questions. Before the break, we were talking about traditional health plans and a new program called health savings accounts. Dave, how can one learn more about them?
Well, the internet continues to amaze me with the amount of information and the speed of delivery. That might be a great first step.
If people want to get an idea of the costs and how it might work for them, how could they proceed?
Well, it's a pretty easy process. They can contact the insurance company or the agent for preliminary costs and brochures.
Is there ever an obligation to buy?
No, there is never an obligation to buy.
Well, Dave, that concludes another segment of My Insurance Matters. On behalf of Dave LaClaire and our piano player Steve, this is John Shega wishing you a safe and healthy week.